Good afternoon, everyone. Thank you so much for joining me. Apologies that we started a bit later than expected. Just wanted a few more people to join me. So good afternoon once again, and thank you so much for being a part of this session. My name is Azizat Awonuga, and I will be your moderator for this maiden edition of the Parthian Women Leadership Series. And today we'll be talking on achieving financial freedom through the right investment decisions. And our host for today is Ebilola Ashcroft. She's the Vice President for Products and Operations at Invest and has had about 10 years experience in the financial markets. Hello, Ebilola. You're mute, your audio.
Sorry about that. Thank you, Azizat. Good afternoon. Good afternoon, everyone. Thank you for joining us on our maiden edition of the Parthian Women Leadership Series. We are delighted to have you join us today. So going into today's discussion, I think financial freedom is a word or a phrase rather that a lot of us probably hear often, similar to when we hear investing, but we don't necessarily think about it, I guess almost consciously, because it seems like something that is, unattainable. You have to sort of, it's for a certain criteria of people, it's for a certain level of people. But the good news is that that's actually not what it means. It doesn't, financial freedom doesn't equate to being rich. It simply means having control over your finances. That's it. So imagine a scenario where what's happening in the economy now? There's higher prices, food prices are going up, and fuel prices are going up. There's a lot happening in that space. But just think about a case where, despite what is happening, with prices in your environment, you are not bothered, like you're not faced. You don't have to make any sort of significant changes to your lifestyle to be able to accommodate the changes, economic changes in the environment. And that's what financial freedom can do for us. So based on interest, based on preferences, based on our stage in life, financial freedom will look different to different people. For myself, it could be about owning a home. To another person, it could be financial freedom for them would be getting to a point where they don't live paycheck to paycheck. For somebody else, it will be that, man, I want to have enough money to be able to quit my job for a while because I need a break, and I would still be all right. To another person, it could be that I want to be able to go to Harvard in 5 years' time. I want to be able to pay for my tuition. For somebody else, it's just a case of, I don't ever want to be in debt. I don't ever want to be in a situation where I have to borrow money from someone or from a lender to have to be able to sustain myself. And it can go on and on and on, depending on the individual. We can have people whose definition of financial freedom will be really lofty, like, I want to be able to give consistently and significantly to charitable organizations. And so it can vary. But the truth is, regardless of what we desire, regardless of what financial freedom means to you, means to me, it will not be attained if all we do is just think about it. Meaning that, yes, I think about how I want to be able to travel and see the world, but I don't do anything about it. I stay stuck in the same spot. So one of the very first things that one has to do to be able to get to this point where or start on the journey to attaining financial freedom is a mindset shift. So it requires a lot of, it requires commitment, it requires diligence, it requires discipline, and it requires planning. So you want to start on this journey. You have got to define what your goal is, what your life goal is. I think that's the very first step, because you have to have an end in mind when you're, when you start out on anything, any journey. You've got to have an end in mind. You also have to make sure that as you're defining or articulating your life, these goals that you want for yourself, you are also considering that it is something that is smart. Smart in the financial world acronym means that it is specific, it is measurable, it is something that is actually achievable. So you don't want, yes, we all want to dream, we're dreaming big, but the way to go about that is to start with the steps that, start with, I don't want to call them baby steps, but start with steps that are actually achievable as you go on that journey. Then they have to be realistic. And the last bit is that there has to be time bound. You don't want to set a goal for yourself that is open-ended, because what happens then is that, you can't keep track and you lose it. So you start by doing that. Then what are the other things you can do? What are other steps you can take? You can start by budgeting. So drawing up a budget for yourself per month, per quarter, however works for you, and trying to stick to it. You can try to cut down on expenses. So track your spending. What are you spending money on? Is there a way you can save a bit more, rather than spending everything? Can I keep some aside? And as I'm doing that, I have to start looking for what to do with the money. What can I do with this fund that I'm setting aside? You can also try to increase your income, try to earn more. If you can find a way to do that in the job that you're in, or the business that you're in, that's good. If you can afford to bring on more streams of income, get a second job, start a business, also, fantastic. And all of these are things that would help you towards being able to attain financial freedom. But outside of all of these that I've mentioned, there's one key thing that if you don't do, or if you don't take on board as you're doing every other thing I've mentioned so far, will make your journey to attaining financial freedom a very long and probably unsuccessful one, and that is investing. Investing is like what holds everything together. What investing does for you is that it gives you the element of time and the power of compounding to actually attain wealth. I keep telling people, a lot of people don't, when you talk about investing, it seems far-fetched, but I paint a scenario. Imagine you just putting aside 20,000 naira every month from your pay. And you do this consistently for, say, 25 years, and you are able to invest it at an average of 10% per annum. For instance, that means that at the end of that 25 years, you would have about 26, roughly around 26 million naira if you do that. And your principal, your contributions in that period would have been just, I think, roughly about 6 million. And so when you think of the interest that you have made, that's 16. That's what compounding does for you. To demonstrate the element of time, think about if I extend my period to 30, think about if I then extend my investment period to 30 years. Every other thing stays the same. I'm still just investing my 20,000 naira per month. I still have my average rate of 10%. Then that takes the money that I would have at the end of the period all the way to 45 million, from 26 to 45 in just an additional 5 years. Nothing else has changed. And that's why investing is very key. Investing as much as one can, investing early, it's good. But then again, if you have missed out on investing, now then is the time to start. You don't want, we don't want to have another session in a couple of months' time and you haven't done anything since this session. And so as we go into the discussions today, what we're going to try to answer, the questions we'll discuss, the questions we'll ask, the discussions will tailor around, what investment options are available for people to invest in, how can they access them, what makes a good investment, for me, but might not necessarily be a good investment for another person. And I hope that as we do go into the session, we will be able to provide you with information that will be beneficial towards your journey in attaining financial freedom. Thank you. Aziza, back to you.
Thank you so much, Ibilola. That was really insightful. Okay, so to shed more light on our topic for today, we have Ronke Akinyemi, who is our panelist and a senior associate global markets at Parthian Partners. Ronke has about 10 years experience in fixed income brokerage and in the financial markets as a whole. Good afternoon, Ronke.
Hi, Aziza. It's a pleasure to be here.
Same pleasure to have you. And also we have Abimbola Adeoye, who is the senior investment broker at Parthian Securities. Bimbo has about 7 years experience, primarily in the equity markets. Good afternoon, Bimbo.
Good afternoon. It's a pleasure to be here. Thank you.
Okay, thank you. So we'll be moving on to the panel session, and we'll want to share the wealth of knowledge that our panelists and hosts have and want to share with everyone today. If you have any questions as we progress with this session, kindly click on the Q&A tab on your screen and drop your questions in there. So when we hear about investment, the first thing that comes to our mind is money. Could you please give us some insights in what ways can people increase their income in the long run and in the short run? Abimbola, if you could help with that, please.
Okay, thank you, Azizat. So according to an NBS report that was released in 2021, about 40% of Nigerians live in poverty, and in absolute figure, that's about 83 million Nigerians. This figure is expected to rise to about 90 million in 2023. So the question is, how do we ensure that we are not part of the statistics when it comes out in 2023? So the answer simply is, just like the host has said, have multiple sources of income. It generates, have assets that can bring in more money for you. So in the capital market space, we have quite a number of capital market instruments that can help us achieve that. Take for instance, we have stocks, we have exchange traded funds, that is ETF, and we have exchange traded funds and we have stocks. So that is just to mention a few. We actually have quite a number of them. So the stocks and ETFs can serve as short-term instruments and also serve as long-term instruments. So short-term instruments are assets that can bring in returns to you in a short period, let's say in a year or less than. And we also have long-term instruments that can help you generate wealth over time. So these assets that I just mentioned, these stocks and ETFs that I mentioned, can help us earn passively. So what do I mean by earning passively? It means that you do not have to put in so much effort. You do not have to you do not have to trade your time for money, just like we do for a normal 9-to-5 job, or for those running their own businesses. You do not have to do that. So it is just basically using your money to earn more money. So taking advantage of this assets, taking advantage of this capital market instruments can actually help us generate returns and also help us achieve financial independence in the long run.
Okay, thank you so much, Bimbo. Thank you. So apart from stocks, you mentioned stocks and ETFs, but then apart from stocks, what other financial investment opportunities can one take advantage of? Ronke, please, could you help shed some more light in that regard?
Okay, so I mean, aside from stocks and ETFs, like Bimbo mentioned, there are a host of other investment opportunities we can take advantage of. But for the purpose of this session, I'll be talking about 4. The first one would be treasury bills and commercial papers. So what are treasury bills? Treasury bills are discounted instruments issued by the federal government. In simple terms, a treasury bill is like you lending money to the government. The period is usually short, so between a year or less. So like I said, when you buy a treasury bill, you are lending money to the federal government, you get paid interest at maturity. This is a very safe option because, I mean, you have the full backing of the federal government. The key difference between a treasury bill and a commercial paper is that if with a treasury bill, you're lending money to the government, but with the commercial paper, it's almost like you're lending to organizations. So the second investment opportunity I'll be talking about are the FGN savings bonds. It's also, I mean, even though it's a capital market instrument, it is tailored for retail investors in the sense that the minimum amount is about 5,000 naira. It pays you interest quarterly, and then you get paid your interest and principal and maturity. So in this case, like I said, This particular product is tailored for retail investors. You get paid interest quarterly. The tenors are usually short, within about 2 to 3 years. The third one I'll be talking about is fixed deposits. So fixed deposits are also a great way to invest your money. So look at a fixed deposit as you lending money to a financial service company or financial institutions, microfinance bank, commercial banks. The typical minimum amount is about 100,000, and the tenors usually range from about 30 to 360 days. Usually, the longer you fix your money for, the larger the profit you get. And to get started on this type of investment, all you need to do is contact your account officer. They will provide you with a rate guide, and then this will help guide your investment decision. And then the last investment option I will be talking about mutual funds. So what is a mutual fund? A mutual fund is a financial vehicle made up of pool of money collected from different investors. So look at it this way. I have 50,000 naira, you have 100,000 naira, the next person has 5,000 naira, next person has 500,000 naira. Individually, we cannot do much with this money, but what the fund manager does is that they pull these funds together and invest it in certain securities, and then basically basket of securities called mutual funds. So it depends on the type of mutual fund it is. That will determine what the money is being invested in. It could be a money market fund. So this is a fund that invests in money market securities. It could be a fixed income fund or an ETF fund. Like I said, mutual funds are usually managed by fund managers.
Thank you so much, Ronke. Okay, would you like to add anything to that, Ibilola? Any thoughts, any addition? So Paul Ronke just said.
No, I mean, they've pretty much covered some of the investment options that are available out there, but then there are what you would tag as alternative investment options as well. So things like your real estate, things like commodities, so oil, crude oil, gold, copper. I mean, even food items, classify as commodities in the investment world. So you have things like cocoa, soybeans, palm oil. All of those are things that there are investment options that are available now. In terms of who invest in those, maybe it might, how do I put it? It might sort of rest on how savvy you are as an investor, but they are also alternative, investment options that people can invest in.
Thank you so much. Okay, Ronke, so you spoke about a few options, like we all heard. So of all the options I just talked about, which is the safest and gives the most return, on the investment? Where can people who do not have a high risk appetite put their money in for the best return?
So the safest, I would say, are the treasury bills and the FGN savings funds, because it is literally you lending the government money. You're not lending it to some shady money lender or your neighbor or your family member who can run away with your money. And like I said, it has the full backing of the federal government. And like I always say, worst case scenario, they print Naira and they give you your money back. The one that I would say gives the most return on investments would be the mutual funds. Looking back at last year, the top performing mutual funds were the equities funds, ETF funds, mixed funds, which are kind of like balanced across the different types of securities, dollar funds, and I think the Eurobond funds as well.
Okay, thank you so much. So let's put this in practical perspective here. So let's say someone's rent, let's say my rent is 800,000 naira, and I have saved about 500,000 in the bank. The rent is due in December, mind you, we're in March, and I don't want to touch the money. In fact, I want that money to grow to be able to, pay my rent in December. What do you think I can, put my money in, where my money can move from 500,000 to 800,000 by December in time to pay rent? Can you, give me available options on what to do?
So, I mean, this means that you're looking at an investment that will generate you about 70% in about 300 days. And I mean, honestly, it's almost impossible to find something like that. And I would say be wary of anyone who promises you such. However, I would advise that, let's say, for example, you are a salary earner, you have 500,000 naira currently. Every month from your salary or from your business, you should put in something to grow that 500,000 naira. I would also advise that you invest in a mutual fund where you can top up every month and you know that your money is growing. You will not necessarily get, you might not necessarily get the 300,000 you're looking to balance off by December, but it will take you closer to it than nothing. However, if you are more risk averse, I would say look into riskier investments, maybe dabble into agriculture or cryptocurrency, but I would say that you should do your due diligence first. And I would also like to add, as your financial advisor, I do not think it is wise to gamble with your house rent.
Thank you so much. Please, once again, if you have any questions for any of our panelists or our hosts, kindly click on the Q&A button on your screen and send in your questions. So Bimbo, most people that I know don't go into equities because they feel like one day they'll just wake up and their money has just, magically disappeared and, just gone. It's just gone. So how does equities work? What are the benefits and how can one really take advantage, in that equity space to achieve financial freedom?
Okay, thank you, Azizat. So I definitely agree with you that there is a knowledge gap that needs to be bridged in the equities market. And for those that know little about, those that have little knowledge about the equities market, there is this fear of, oh, I'm going to lose my hard-earned money. Yes, I totally understand. But equities is known to be an asset that helps to build wealth, a long-term wealth, and you can also generate real returns from it. So take, for instance, we have Warren Buffett. Warren Buffett is known as the professional investor. So he looks out for companies that can perform well over time, and he invests in such companies. So this is what equities can help you achieve. Yes, it is compared to fixed income instruments. The equities is quite volatile and it is quite risky, but the returns that comes to you is unlimited. There are unlimited potentials that comes to you. So what exactly is equities? Equities mean you have direct, investing in equities mean that you own a certain percentage of the company, right? And that could mean owning a certain percentage of the company, and you have privileges, you have rights to some things or to some dividend that is being declared by the company. So the potential returns that comes to you, number one is capital appreciation. Capital appreciation means your investment has risen in value. Your assets basically so let's take a life scenario. If I bought Zenith Bank at 22 Naira, and currently Zenith Bank, when it was trading at 22 Naira, and currently Zenith Bank is at 26 Naira 50 kobo. So it means I have made a return of about 30% return roughly. So that means that the difference between purchasing price and the selling price is the capital appreciation that I've earned as an investor in a company. So another benefit or another return that comes to you is dividend declaration. So we have companies that declare dividend from time to time. So especially when they have released their financial statements, that is at the end of a financial year. So we have quite a number of them listed on the stock exchange that pay dividends. So UCAP, for instance, paid 1 Naira 50 kobo. We have Zenith Bank, we have GTCO that paid dividend this last time, and they also, some of them also declared interim dividends. So this can be seen as earning passively, which was what I talked about the other time. So what are the benefits that comes to you as an investor? Number one, it is a source of income. It is an additional income to you. You are earning passively. There is capital appreciation that comes to you. There is dividend that comes to you. Number two, ease of diversification. So that means you can invest in different sectors of the economy. And what diversification helps with, again, is if a company or a sector is performing woefully, if a sector is returning negative, that means the other sectors can also help in pushing that effect or that negative return that you get from the sector that is not performing very well. And I'm sure most of us on this call have heard of the term, do not put your eggs in one basket. Do not put all your eggs in one basket. So it means that if one sector is not doing well, the other sectors are actually doing well. Number three, the third benefit that comes to you is it serves as an edge to inflation. According to NBS, inflation is currently at 15.6%. So if you have made a return of 30% from an investment, 30% minus the inflation figure of 15.6%, that means you've made a real return of about 14.4%, which means your purchasing value has not been eroded. You have more money to be able to buy or to meet other financial obligations. Another thing that comes to you when you invest in equities is you do not need a lot of money to invest in equities. So you can start small. You can take a percentage of your salary. You can take a percentage of your income or profits, then invest in shares. So that helps so that means your money is actually working for you. You have more returns that is coming from you. So another benefit that comes to you is liquidity. There is free entry and free exit. You can exit your investment anytime. You can sell your investment in piecemeal. If I own 500,000 units of Zenith Bank, if I own 500,000 units of Zenith Bank, and I have a financial obligation that I want to meet, I can sell 100,000 units of my Zenith Bank instead of selling the whole thing in my portfolio. So it helps. You can sell in piecemeal compared to real estate where you have to look for you cannot really sell your properties, or you cannot, even if you find a buyer, you might not get a buyer on time. So you can sit but for equities, you can sit anywhere in the world. Then you can purchase or sell some of yours. There are willing buyers in the market to take off your investments from you. So how do you invest rightly in the markets? How do you make the right investment decisions? Number one, you have to analyze, you have to look for fundamentally sound stocks. You have to analyze the company that you want to invest in. There are some questions you need to ask yourself. What is the financial stability of this company? What is the financial wellness of this company? Is this company able to make, are they able to perform in the space of 2-3 years or 4-5 years? The growth potential, what is the growth potential of this company? So if you're able to answer these questions and you're comfortable with them, with the answers you're getting, yes, you can go ahead and invest in such company that has a good fundamental backing. Another thing to consider when you're choosing a stock to invest in is the liquidity of the stock. So don't buy a stock because it's cheap. I think I need to sound that note of warning. Don't buy a stock because it's cheap. We have some people coming to the market. They want to they buy cheap stocks. Penny stocks are really good. They're fantastic stocks, but they can give you, they have the potential of giving you 50% return, 100% return, but there has to be like a financial backing. There has to be like a fundamental backing. So don't go into the market because you just want to own shares. Have at the back of your mind that you want to make money from owning shares. You want to make money from investing in stocks. And liquidity, considering liquidity, you can go into the markets. So there's some stocks that are not all that liquid. You might not be able to sell them as at when you need the money, as at when you need to meet that financial obligation. So you can ensure that you look at the liquidity of the stock before you go into it. Another thing to watch out for is the corporate announcements or corporate actions that is coming from the company. So news is seen as signaling, like it has signaling effects in the markets. It can drive the share price up or down. So if you're invested in any company right now, you might need to you would have to follow the company closely. So if there is any negative news that can impact the company, that can make the share price go down, you have to take a decision. So I think these are ways to make a right investment decisions.
Thank you so much, Bimbo. That was quite detailed. Okay, so when you were speaking earlier, you mentioned ETFs, that's a compilation of stocks or shares, which you just explained. Yeah. So how can one make money through ETFs, and why should one invest in an ETF over, a stock or a share that most people are familiar with?
Okay, ETFs, the full meaning of ETF is exchange traded fund. It is a pool of investment securities. So that means that you have a basket of securities that you're investing in. So ETFs work in a similar way with stocks. They are listed on the exchange. So what exactly is ETF? ETF is a basket of securities that tracks an index. So it could be shares. It could be a basket of securities that tracks commodities. For instance, we have an ETF that tracks gold on the exchange. We also have ETFs that track fixed income instruments. So if you do not want to invest if you want to invest in a particular sector, but you're not certain of the company you want to invest in, what you can do is buy ETF. So it gives you access to the shares in that sector. So there is that diversification benefits that comes to you when you invest in ETF. So it gives like an indirect access to the shares in the basket. Another thing is it is cost effective. So you can imagine if I want to invest in oil and gas sector, and I have to buy all the stocks in the oil and gas sector. That is a lot. So yes, I might have the money, but what about the statutory charges? What about the transaction costs that I need to pay for each of those companies or each of those shares that I buy? ETF gives costs. It is cost effective because once you buy like 100 units of ETFs or any units that you buy, you're just paying transaction cost once. So I think those are the benefits that comes to you when you invest in ETF.
Okay, so a common phenomenon that, I'm sure we have all seen at one point or the other is someone invests in the stock market and suddenly it dips. All the value of whatever I put your money goes down. So what happens? Does this mean that the individual has lost their money? What should I as an investor do when that kind of thing happens?
So to answer this question, I'm going to paint two scenarios. The first scenario is if the general market is down. So we all hear that the all share index is down or the bears have taken over the market. What does this mean? That means all the stocks in the market, everything is down. So take for instance, in 2020, when the pandemic, when COVID hit the world and the global assets, equities, the global exchanges, everything was down. So what I would say is do not panic because you're not the only one in that situation. We have a lot of people in that situation as well. So there's so many things that can cause the markets to be down. It could be macroeconomic factors. Maybe the GDP numbers released by NBS is not favorable, and so markets can react to that news. The second scenario that I would paint is if your own investments or the shares that you have invested in, if it is going down, if it has depreciated in value. So how do you undo this? Again, do not panic. What you need to do is, what are the reasons behind this? Why exactly is my investment going down? Or why exactly is this share price? Why is it going down? So it could be as a result of sentiments. There could be a buyer a seller rather in the market that has a financial obligation to meet or has seen another investment opportunity. And this particular seller has a lot of shares. So it means that when the seller comes to the market, the share price is going to be adversely affected. So do not panic. It is like a temporary situation. So my proposal is, if you have enough money, and after considering the fundamentals of the company, of the fundamentals of the stock. If you have enough money, yes, you can buy lower to average down your cost. Buy lower to buy at a lower price to average down your cost, so that when other buyers come into the market, you are at an advantage. You can sell to them at a higher price. The next thing that might, or the next point that might affect your share price is if there is a negative news that comes out concerning that company. So you need to ask yourself, is this company able to make money? Is their existence, the fundamentals of this company, is it being threatened? Are they going to perform well? When they release their financials, is the profit going to reduce drastically? So if it is a news that will adversely affect the company, I would advise that you jump out, cut your losses. Then you can look for other investment opportunities in the market to take advantage of. So those are the two scenarios that I will paint and my proposals.
Okay, so basically, if it's the whole market that is going down, just be patient for plenty.
Don't panic. You can wait it out, because if you're to sell your shares, if you're to sell your investments, you'll be selling at a loss. So you can decide to wait it out until everything is fine.
What if it's company specific news, like bad, they did something, you should just, cut.
Yeah, just jump out.
Thank you very much. So how can one prevent saved funds from losing value over time? You all hear about inflation, devaluation, dollar appreciation. There's always one thing or the other that tends to affect our money. I don't know if Ronke can give us some insights on how best we can hedge against these market forces that we have no control over.
So today we currently have inflation at about 15.6%. The exchange rate keeps going higher day by day. I would say the best bet is to diversify your investment, preferably different currency. Let's say, for example, dollar. This helps you to hedge against the devaluing naira. I would suggest maybe look into purchasing US stocks or US treasuries. And I mean, there are various apps that make this possible with little or no stress, but I would also advise that you do your due diligence first before getting into this.
Okay, thank you so much. Ibilola, I don't know if you have anything to add on regards to that. Hello, Ibilola. Okay.
Yes, sorry. Yes, so I mean, Ronke has sort of covered the board. You also have stocks like, well, not stock, asset classes like your real estate, which, historically has always been tagged like a good inflation hedge. So in terms of wanting to safeguard your funds against, the eroding effects of inflation, you could look to further diversify your portfolio so even if you can't go into, say, real estate, in terms of actually buying property, holding property, like flipping properties around and all of that, you could go into buying, stocks that stocks of company that are into, property development, or I think we have the REITs as well on the exchange that you can buy in, which are all backed by property. So you could just look to diversify the portfolio and include more of those asset classes that have historically been shown to be good inflation hedges in your overall portfolio.
Thank you so much. So Bimbo, after all the insights and tips, so just overall, give us a key, should I say, general advice on financial independence when it comes to women out there. Like, for women, what do you think, what's your opinion, what's your take on financial independence as a woman?
Okay. So I would say it takes it's a conscious decision that everyone has to make. And there is this formula that I came up with, that is your financial freedom is equal to your income minus expenditure. If your expenditure is high, that means your financial freedom. If your expenditure is higher than your income, your financial freedom is zero. You're not financially free, right? So this formula has helped me over time. And how can you achieve this? Number one, consistency. You have to be consistent. So you can take a certain percentage of your salary, or maybe your profits, or when you get when we get the bonuses, we can take a certain percentage of it and invest in the instruments that we have mentioned, fixed income instruments, or shares, depending on your risk appetite. The second thing to watch out for is you need to increase your pool of income. That is how to achieve financial freedom, which was what the host said earlier. We have to increase our streams of income. And how do we do that? We have listed out different financial instruments that can help us achieve that as well. So another thing that I will mention is live within your means. So it is nice, it is good when you are living based on your income. Yeah, debt is good. Debt is good depending on what you're using the debt to achieve. If you're using it to buy an asset that can bring in more money for you, oh, definitely, please, you can, but there has to be like a minimal reliance on debt. Lastly, I would say have a periodic financial meeting with your advisor or stockbroker. So that is where we come in. We look at your portfolio. How can we help you reduce? How can we recommend stocks that would give you potential returns, or how can we sell some of the stocks that can reduce your negative performance in the overall portfolio? So you can have a sit down with your financial advisor or your stockbroker on how to improve your net worth, and that is where Parthian Group comes in.
Okay, thank you. Okay, so thank you so much for highlighting that. So you said we can reach out to ask for advice on what exactly. So what platforms? How do we reach, or how do we get this information about stocks, finances? What's going on? How do we get it?
So you can subscribe to our mailing list, or you can send us an email address, info@parthiansecuritiesng.com. Then we will attend to any of your needs or any of your questions. info@parthiansecuritiesng.com.
Okay, so that will be put in the chat box for anyone who's interested in reaching out to them. So Ronke, what's your take on the same question? What's your general financial advice to women out there who are looking for financial independence?
So my advice to women out there is to start investing. Like, there's a saying about planting trees that the best time to plant a tree was yesterday, the next best time is today. As a woman, naturally, society places us at a disadvantaged position, but this doesn't mean that we cannot break the bias. It doesn't mean that we cannot be financially empowered. So I would say start investing now. There are so many excuses we can come up with. Oh, I do not have enough money. I don't know how to go about it. But I can guarantee you that however little the amount you have, there's an investment opportunity for you. And like as Bimbo mentioned, you need to be disciplined. You need to be consistent while investing. Investing should be as important as your money for data or your money for food. It shouldn't be luxury. It's something that, you get your salary every month, take out. Your investment should be as important as taking out money for food. Thank you.
Thank you so much. Okay, so we'll be taking questions now from the audience. If you haven't sent in any questions that you might have, please do so. Okay, so someone here says, Bukola Idowu, she asks that for someone who has an unpredictable revenue stream, how do you advise such a person on building savings? Okay, so let's say Ibilola, please.
I mean, I think Ronke practically, just sort of mentioned it in her last statement that she made now about you just have to start. So yes, it would be nicer if I could put something aside every month, but not being able to put something aside every month should not be shouldn't be a reason not to put something aside when I have the means to. And so it's just about the consistency. So when I do have that revenue coming in, I have a percentage that I would dedicate, towards investing and growing wealth. The months that I'm able to meet up, I do that. The months that I don't have anything coming at all, yes, maybe, I might skip those months, but it's not so much just even about that. By continually doing this when the income is in, what you're also doing is that you're sort of building that muscle that allows you to keep at it when you do have money coming in regularly.
Okay. Thank you so much. So Tony asked that what investment options would you recommend for someone that is above 55 years? Ronke, please.
Okay, so let me take that. So if you are above 55 years, it means that, you are within the older generation. So you are most likely not you're most likely not looking to take too many risks. So I would advise that you invest in government securities. Reason being that they are very safe. Like I said, it's almost like you lending money to the government. Whatever happens, the government will pay you your money back.
Okay, thank you. So Chima asked that in a pre-election year like the one we are in now, which of these instruments should a risk-averse investor put his money to get good return? I think we answered this earlier, but Bimbo, it was just still a few words.
Okay, yeah, like you mentioned, I think Ronke answered this. So you're a risk-averse investor. You should look at federal government savings bond as an investment option, or treasury bills, something that will give you periodic returns, and something that has lower risk, and it is safe. That means at maturity, you're able to get your principal plus interest. So I think looking at financial instruments issued by federal governments would be a good instrument for you. Would be a good investment option for you.
Okay, thank you so much.
Okay, sorry, Azizat, I think I just want to add to that.
Okay,
so,
yes, sure, go ahead.
Yeah, so I think typically, so he's asked something very specific. He's talking about a pre-election year, and so what typically happens is, for people who are a bit on the service side, one of the first steps you take is look at what happens historically in pre-election years, and look at how markets react. So how does the fixed income market react? How does the equity market react to pre-election years? And historically, what we're typically saying is that when in the equities market, for instance, we tend to see a decline typically when the election is coming up, because you have foreign investors who are part of our markets start to reduce their holdings because they aren't quite certain, of how the election is going to pan out. Is there going to be violence after? Is it going to be peaceful? So everyone starts to reduce their holdings in the equity markets. And when you have that, then you see prices start to dip as that effect comes in. And then what happens is as the reduction or the portfolio reduction in equity is going on, then you have them moving to the fixed income space. So on the flip side, then you start to see a rally, in that market. So yields, prices start to go up, yield starts to drop. So what is typically, and I mean, for somebody who is trying to sort of target that period in particular, a good thing typically to do is to try to keep your money in cash. Cash is actually a perfectly risk-averse investment option. And when I say cash, I don't necessarily put it under your pillow,
under your bed.
Yeah, so I just mean keep it in liquid, in your relatively liquid assets. Do your mutual funds, do your have your cash ready, do your what's the other one called, fixed deposits. You can have that. So as you start to sell them, you start to move into that space, because the expectation is that the yields on those will start to dip. And if you've gotten in at a point where you bought it at a higher yield and yield starts to come down, then you've actually made money in a relatively safe investment option.
Thank you so much. That really explains a lot. So Collins is asking, what's the best way to beat inflation when your income stream is low? I know we've spoken about this earlier, but then this now says if you're a low income earner, what's the best bet? Ibilola, would you like to?
So I think what I would say to that is it's actually not about how much you earn. And the beautiful thing is that you don't need, there are vehicles. Ronke spoke about mutual funds. Bimbo spoke about ETFs earlier on. Those are vehicles that how will I put it, that have a pool of assets or pool of investments in them already, that you don't need to use 100,000 naira, 200,000 naira to invest in. With as low as 1,000, you can invest in those, but enjoy the benefit of having the higher returns on those assets, on those funds applicable to you as well, even though you have just 1K and another investor in a portfolio probably has 2 million. It doesn't quite matter. It doesn't quite matter. You're still eligible, you will still be able to earn the 14% that the ETF has generated over the year, or over the period in which you have invested, or the 17% that he has generated. Exactly. And so you should not look at it from the mind, you shouldn't look at it from the mindset of, oh, I don't have money, meaning that I cannot beat inflation. It doesn't quite work that way. It's more like, what are the vehicles, what are the avenues that are available to me with my small money, but have potentially good returns. So do a bit of research, Google, just put it in Nigerian space. What can I do? ETFs are available. They will show you, they will give you the list of names. They'll give you the returns that they've generated. So you can make an informed decision as to which one you'd like to invest in. And, then you can get started.
Okay, so the Parthian Securities email address will be put in the comment section for anyone who wants to reach out and subscribe to the newsletter and get more information, as Lola has said. So Ferrari is saying that the complexities with markets now and investment instruments have made investing seem like a full-time job. Are there investment options that can actually give me value without consuming so much of my time? Bimbo, please, would you like to take that on?
Okay, I'm sure we have different investment options, which we spoke about earlier. So we have stocks, we have equities, investments in equities. So we know you're a busy person. We have so many people that are into 9 to 5, or they have businesses that they're running. So at Parthian Securities, what we basically do is break down the numbers. You don't have to do the analysis yourself. Once you subscribe to our mailing list, we can send you the financial statement, the breakdown of the financial statements, what we like in the financial statements, and what we don't like, the target price and all. All you need to do is go to the markets and buy. Or you can send a mandate to your stockbroker, or you can use your investment app to buy shares. So you don't really have to do the analysis yourself. We, your stockbroker, can help you do the analysis. Then we give you our own investment recommendations. So stocks, we have FGN savings bond, we have treasury bills that you can take advantage of. So these are investment options that will give you value.
Okay, thank you so much, Bimbo. So guys, we've come to the end of this session, but before we go, Ibilola, please, would you like to give us a closing remark? Thank you so much for being our host for today. Final words, please. Before we go.
Thank you, Aziza. Thank you so much to everyone, to our panelists, Bimbo, Ronke. Thank you for taking time to share your wealth of knowledge with the house. To our participants, the audience, thank you for giving us, this allowing us to take this small portion of your day, to talk and converse and, share knowledge, learn. And we hope that it has been as beneficial to you as we intended it to be. And we do look forward to seeing you at the next edition that will be holding, and I guess details will be communicated in due time for that. So thank you everyone once again, and do enjoy the rest of your day.
Thank you so much. Thank you so much, Ibilola. Thank you, Ronke and Bimbo. You guys have been phenomenal. Thank you to everyone that joined us. As Ibilola has mentioned, we hope to see you again in the next edition. Have a lovely afternoon, and the rest of your day should be good, of course. All right. Bye.
Bye.